Hey Avanza, I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and I am joined by the famous Nicklas and Philip of Avanza. It's so great that I get to join the afternoon with you. We are live in Times Square, and so excited to meet with you guys.
So excited for us, because we just visited your show, Trade Talks.
Yes.
And now we're down here in Times Square.
And we had an awesome conversation about why U.S. markets are so attractive to European investors. And I'll tell you something anecdotally from the U.S. perspective. I would imagine that even with European customers, it's the same as U.S. customers. Where are you going to get the yield? Where are you going to get the growth? And a lot of people are investing in names that they know, that they understand. I know I watch Netflix. I know I love shopping on Amazon Prime. I have 2 Apple iPhones. And so we invest in stocks that we're familiar with. And to be honest with you, a name like an Apple, from a valuation perspective, these are really the attractive stocks that I know American investors are looking at. ETFs are another popular product because, again, I love Apple, I love Amazon, but they're capital intensive because they have grown in share price. With ETFs like the Qs, the QQQ, you have that full exposure to all those tech stocks on Nasdaq. So these are really what's popular in the US right now.
Yeah, and in Sweden we're talking much about water and the growth of e-commerce and the retail desk. I mean, you're working here, you're living here. Are you actually going into
You cannot, okay, so listen, you can't get around the city without having a conversation about Trump. And you cannot get around the city without having a conversation about Amazon. And the impact of everything. So the big story that we have right now is Amazon bought Whole Foods, right? And all the grocery stores, like your Kroger's, for example, your big box stores like Costco, Walmart, Target, they got a hit on it because Amazon is now in that network. Amazon has the top distribution network. It is tough to compete with them. They took down prices at Whole Foods in some cases by 43%. Now, I love shopping at Whole Foods, but it's a treat. It's expensive. Whole Foods tends to be expensive. Now, they are getting a whole new market of people that can go and enjoy those higher end products. I, for one, am excited to try it out. Amazon Prime customers, which I am. I do 95% of my shopping on Amazon.
95%?
I would say just about everything I get, whether it's home goods, products, clothes, shoes, everything. I do everything on Amazon.
What about your friends?
Same thing.
Really?
For Christmas, got my parents a Prime membership, my brother Prime membership. So I can understand and I feel for what's happening with brick and mortar and smaller mom and pop shops, but you know what? It's tough to compete with them. As a consumer, I love it, but again, back to the narrative, you can't go anywhere in this city without talking about Trump or talking about Amazon.
So we're not going to have a retail death?
I don't think we're going to have a retail death, and one thing you have to remember as well, on the extreme coast, like New York or San Francisco or Chicago, your developed cities, we're all about on-demand, we're all about getting it to our door. We don't have time to run all over the place and shop. But I do think in other parts of the country where going to the store is more of an experience, where stores are so spaced out relative to the cities, it's what you would do on a night out, or you're connected to that store. So I don't think it's total death of retail, but I do think in the cities where on-demand is more prevalent, it's really tough unless you're providing that experience, that lifestyle experience. It's really tough to be competitive.
But what about Trump then? We need to talk about him.
We do. Like I said, you can't avoid a conversation anywhere without talking about Trump.
Because that's the only thing that it's talking about in Sweden. Trump
and the debt ceiling. That ceiling
the debt
as well.
ceiling. You know what's really interesting about Trump is we got this massive move in the market, which from my 401k perspective, I'm happy about that. Your retirement plans are happy about that. But what is puzzling for all traders is markets typically don't like uncertainty. We should see more volatility because of it. And day to day, we just don't know what's he going to say on Twitter, what policy. It's even a little bit early to talk about policy because we haven't really seen an agenda for that. Right now, the U.S., we're really focused on that catastrophic hurricane in Texas right now. So we're looking at energy companies and supply disruption in addition to the human factor, right? So that's really what we're focused on, and that'll be for a couple weeks, and that'll take years for them to get back online, but we don't know what he's going to say next. And I'm really surprised that we're not seeing more vol in the markets for that reason. So I think in addition to that, we're also going to look at tax reform. Are we ever going to get that done? And the concern is that he's created such divide in Congress and with constituents that can we get anything done, or do they just dislike him so much that they're going to vote no on everything for that reason? So that's kind of an overhang. Then we have the debt ceiling in October. Healthcare is definitely pushed out to 2018, if anything at all. And of course, we're also having the conversation about the wall with Mexico, which I personally don't think is going to get done. No. But what I would like to see, and I want to be respectful of the office itself, but what I would love to see get done from an American perspective is, let's create these infrastructure jobs. Yeah. It's the most obvious thing that everyone can agree on. And those are the jobs that pay high salary. Those are the jobs that they're going to put money back into the markets. So it's good for the economy overall. So I would like to see that more than anything else.
Are you familiar with Svenska?
Yes, I am.
Yeah, it's a Swedish company. The stock really rallied when we had the Trump the election, and Trump won the election, and the infrastructure in the US and so forth. And then we just had the vacuum. And we saw the 52 from the 52-week high. We got a decline of 25% from Skanska. Many companies own this kind of stock, or the company itself. And we see around 35 to 40% of top line actually deriving from the US. What about the infrastructure? What about the building companies in the US?
And you know what, we saw that impact as well, where the small cap stocks, which are most sensitive to infrastructure spend and tax reform, those are your smaller companies, they were the ones that really took off when Trump got into office, because he's also about deregulation, which is also good for these smaller cap stocks. And we've seen the same thing too. As much as they led the way up, they're also leading the way down for those reasons alone, because if you have stocks running up 25, 30%, if their earnings aren't reflective of that, how are you supposed to justify these massive moves? And that's why I think people really want to see something get done in terms of policy. I think also national security is a big issue. So, you know, that's what people are thinking about.
And for our last question, or second to last
one, not the last one.
You go with the second to last, I go with the last.
Okay.
You go.
All right, I'm thinking about the currency play here as well, because the currency has been weakening towards the Swedish crown. And we actually saw this graph back home in Sweden, where we see the S&P 500, the S&P 500 moving quite high, but the estimate of the earnings actually following as well. So we're talking about the fundamentals, the revenue, the earnings, and this graph is just the S&P 500 and the earnings kind of lingering together like two snakes.
Right.
What about the growth in the market when it comes to earnings?
It's really interesting that you brought up the dollar.
And the dollar.
We saw great earnings with big companies that have these conglomerates like GE, for example, where they are so currency sensitive. So the higher the US dollar, the more it impacts their balance sheet. So when we see the dollar pulled back, historically pulled back like it has, that really helped on the top line, helped with earnings. So my question is, even without a lower dollar, because it will eventually move higher, would the quality of earnings have been as good? And I think that's something that your international conglomerates really have to look at, because currency fluctuation is one of the biggest things that impact their balance sheet.
It's not a good quality for the earnings as well if you just look at the foreign exchange.
Right, it's one thing, I mean, if you only isolate foreign exchange, if you're only making your earnings by doing stock buybacks, for example, but if you're not getting revenue growth, the bottom line isn't growing, you could tweak with top line earnings through some fancy accounting and doing buybacks and so forth. But what I look at first is, or one of the bigger things that I look at is their revenue growth? Are we seeing same-store sales growth? So that's what you really need to look at more than just currency fluctuation. You know you're going to get the impact from that regardless, but you want to see bottom line growth.
All right, and the last one before Philip just wraps it all up. I always do this in Sweden. But you know, the last question before Philip's question is regarding the FANGs and the tech stocks. Our customers love the tech stocks, and we actually got figures from you from Nasdaq saying that the components on the Nasdaq, it's 22.8, almost 23% tech stocks. It didn't move up as much last year, but this year it's been pushing the index higher and higher and higher. Do we need to be afraid of the tech stocks, the FANGs, and the index moving higher, or is it like the earnings are following? What about the tech
stocks? The move that we saw in the FANG stocks really was unprecedented, and that's why we saw such a significant move in the Nasdaq Composite. Now, whether it's on the Nasdaq, the S&P, or the Dow, any smart trader, even your more sophisticated retail investors, they're always going to have some sort of a hedge on. So for example, if my portfolio is mainly Facebook, Amazon, Netflix, Google, all those Nasdaq listed heavyweights, perhaps I'll have some puts on with the Qs, because you have that exposure to the tech sector through the Qs. It's also a way to hedge your portfolio in a downside position, and that's just a smart thing to do. Any money manager is going to do that. So while there is some concern there, there's always a way to play it regardless if the market's going up or down through options.
That was my last question, but I have another one. You've been working in the financial industry for quite some time.
Yes.
What are your best tips for our Swedish investors?
My best tips for any investor would be don't blindly follow who you see on social media as an investing guru, or here's the hot penny stock of the day. It's almost like when you go to the doctor and you get a diagnosis, you're going to research it, you're going to get a second opinion. So you know what? If you buy Apple because you have 2 Apple iPhones, a MacBook, Apple TV, and all that kind of stuff, don't just buy it because you like the product. Go in, take a look at the balance sheet, read some research reports. Perhaps it might be too expensive. It's not at this point, but those are the things you want to take a look at. You want to do the research behind blindly getting into something. You also want to understand what your investment goals are, long-term, short-term, and before you go into any trade, and any good options trader will tell you this, you don't go in saying, how much money can I make? What's my upside? You go in knowing, what's my maximum risk? What's my downside? Can I handle that mentally? Can I handle it financially? So going in and doing your research and also managing risk 100% is the best advice I could give.
Awesome. And the last one I'm just going to say.
I knew this was going to happen. I feel like this was going to happen.
Always.
Just anecdotal that the cash pile in Apple is above 50% of the total market value for the 30 most traded companies in Sweden, which is 60% of the Swedish stock market. So the cash pile in Apple is huge, or maybe the Swedish stock market is small. No, it's good.
All right. Well, I mean, we have more stocks, so it is what it is. But we love it that therere's a lot of interest in Sweden in U.S. stocks. So
cool.
Thanks, Avanza.
Thank you so much,
It was great speaking with you.